What's up, YouTube? Welcome to Cars, Cost, and Technology. Today I just want to do a quick little video on some of the well-kept secrets in the automotive industry, particularly dealing with the new car buying process. This video is mainly geared towards first-time buyers of a new vehicle. Some of you more seasoned car buyers may have experienced this firsthand like myself and may not gain as much from the video, but anyway, just to jump on into it, let's say in this hypothetical situation you are shopping for a brand new car and you found one that you really like with a sticker price of $32,000. You've negotiated the price down to $30,000 and you've went with very average loan terms. Again, this is a trend that is becoming more and more common here in the U.S. for higher automotive loan terms, that is. So 72 months with an average interest rate of about 3%. Again, it could be higher, it could be lower depending on your credit worthiness, but we'll just say 3% is where it falls just for the sake of the example. I just wanted to show, because these are all this is a very typical situation or setup, but I wanted to show some numbers and just make all you new car buyers aware of how this could unfold for you and some tricks to possibly help you avoid this outcome. But anyway, jumping into it, so you can see here again, I've got graphed out the agreed on price, which would be the $30,000. And then the actual price, which let's say you start out with little to nothing out of pocket on the day you buy the car. It seems like a really great deal to sign the paperwork, drive off the lot with the new car and not have to pay anything out of pocket, or very little out of pocket. Seems like a reoccurring theme, and a lot of car dealerships are trying to do that to kind of entice buyers to go ahead and make moves that day rather than having to come back financially prepared. And then I've got the value graph, so where the value goes from there. So just to kind of give you a crash course on each one of these numbers, what's happening on the graph. I started the value out at just around the $32,000 mark. Again, if that's the sticker price on the car, we'll assume that is the actual value of the car right out of the gate. Again, from day one, we've got the consistent price that you've agreed on, which is $30,000. Obviously, that's not going to change on however long you keep the vehicle. And then the actual cost out of pocket being, I put $500 the day that you leave the dealership with the car. So we can see where the graph goes from there. Obviously, the agreed on price is going to stay exactly the same. The actual cost is going to continue to rise just with your monthly payments on the car. I did not factor in insurance, maintenance, taxes on the car. All of that is obviously going to be contingent on what type of car you're getting. So that also is rolled into this equation, but there's just no way to calculate it for this example. So as you see the monthly payments occurring, your actual cost out of pocket keeps rising, and keep in mind that the interest is rolled into this. So you can see by the end of the actual cost here on the graph, you've exceeded your original purchase price or the agreed on price. All said and done, on the loan terms that we looked at on the first page, you would end up paying about $33,000 for this car. So you've already paid more than what you originally agreed on for the car. So let's jump back over to the value section of the graph. You can see it started out above your original agreed on price. But as time goes on, obviously with depreciation, how significant it is on a new car, all said and done, it's significantly less than what the price that you agreed on for that car. Now, granted, you got 6 years of use out of it, but during that time, you also paid for 6 years of maintenance, 6 years of insurance, 6 years of taxes on the car, 6 years of fuel. So, I would still say that this is a relevant model to look at, regardless of the value or the use you got out of the car. So, just to give you an idea of where I came up with these numbers, I used a reduction of 15% off the original value in the first year, 10% on the second year, and then 5% reduction in value every year from then on. That's actually really generous and conservative. There are a lot of other credible websites that discuss new car depreciation that are stating it could be much more than that. So depending on what you're purchasing, keep that in mind. But you can see the spread between what you actually end up paying and your final value on the car. It ends up, it could easily become a close to a $20,000 gap on a new car of what you ended up paying in total on the car with interest and what you're going to be able to end up getting on the car for sale. In this particular model, it ends up only being right around just between $10,000 and $15,000 difference, which is still a lot of money to lose over a 6-year period. And again, that's in addition to the fuel you've purchased, the taxes you paid on the car, the insurance you paid to drive it, and the maintenance to keep the vehicle up. So looking at just some final numbers here, this squeezes them all together and makes it just a little bit easier to view. Again, we've got our original price, our total cost with interest, and our final value. And you can see what a significant drop-off that is when you actually compare them back to back like that. So, I'm not making this video to discourage anyone from buying a new car, or, even buying a used car that they really want that may not be the best long-term value or hold its value very well. The main reason I'm making it is just so that you can see the numbers, and I did want to go over a few things that in my experience have helped, because I have lost a lot of money on some cars and I have lost very little money on other cars. So one thing I would point out is the less that you can finance, the better off your total cost will be. Needless to say, if you are financing a large chunk, paying a high interest rate over a long term, your numbers could end up being far worse than this, paying a lot more in interest and hurting that total number really, really badly. So I know it seems easiest just to sign the paperwork and go ahead and get the car you really want, but in the long run, you will hurt yourself financially. Saving up a little more money, putting down a larger down payment, and paying off the loan quicker will save you a lot in the long run. In regard to the final value and the depreciation on the vehicle, needless to say, you can avoid that by two things. Number one, if you are very persistent on getting a new vehicle, researching different brands that hold their value well and different models, so within each brand or within eeach category of vehicle, obviously you got your sports cars, you've got trucks, you've got sedans, you've got, there's so many different types out there. It is very beneficial to do a little research on which ones hold their value best, because there are pretty significant differences depending, just because of the market out there to buy a used car is going to vary depending on what you're trying to sell. And number two, if you're open to it, researching a good deal on a slightly used car, like I showed on the first graph, you're taking approximately a 20 to maybe even 30% reduction in value in the first 2 years that you own it. Chances are there's not a very significant amount of wear and tear on a car in the first 2 years. So if you're able to find the car that you really like, maybe one year or 2 model years behind, but you could potentially get a 20% reduction in price and avoid that huge curve of value right out of the gate. And then you're still going to get some depreciation, but you're not going to lose 50-60% on the car. You could keep it for 4 or 5 years and maybe only lose 20% or 30%. Which, all this leads up to, the more you're able to save during owning a car and the more value you're able to get out of it when you go to sell it, is just getting you that much closer to the next car that you really want. And if you're in a position like me, in your 20s and just working up towards your dream car, the better you can do that over your lifespan, the better off you'll be when you get to that age where you finally are looking at being able to afford your dream car, whatever that may be. So anyway, guys, I hope you found some of this information helpful. For more content like this, like and subscribe to the channel, and we'll see you on the next video. Thanks. Bye.